Please help me welcome Larry Pollock.
What I'd like to do tonight is talk a little bit about a global perspective of what's going on and kind of help you, if I can, understand some of it, which I'm not sure I do. And I'll give you a little bit of a commercial on what I do for a living. I'll give you a few facts and stats that'll be audited later by our economist coming up right after me. So I think you're right after me. And a few predictions. I always like to give predictions, and people, when they invite me back, always forget what I said last time, so it doesn't matter. And what I thought I'd do is, a few years ago, I was flying back from Toronto, and I sat down and I said, you know, what really makes people successful? And I wrote out a recipe for success, and it was 30 ingredients, and I used it when I was speaking to the graduating class at the university in Edmonton. And we were just flooded with calls the next day because all these kids wanted to get copies of it. And I usually don't make up speeches, I just have speaking notes. So we'd be happy to supply those. I think they're on our website actually. But first of all, a little bit of profile about Canadian Western Bank. And I was reminded the other day when I had coffee with one of the CEOs of the big 6 banks in Canada. And he said, you know, there's only 8 Schedule I banks in Canada, and you're the only one that's less than 150 years old. And that was kind of striking to me. I hadn't really thought of it that way. And we're only 27 years old. All the other 7 are certainly, I think, 150 years old, Laurentian, National, and the Big 5. And we're from Western Canada, which makes us quite unique. And there's only one Schedule I bank that's ever grown up and survived in Western Canada, and that's us. So we are your bank. And one thing we promise to do is every dollar you invest with us in deposits, we'll lend it back into your community. We won't send it down east. In fact, we harvest deposits down east and lend them out here. But we are a Schedule I bank. We started in 1982, actually, on the island here in Victoria. Group of investors got together and formed the Western and Pacific Bank, a Schedule I bank. And a couple of years later, there was another group formed, the Bank of Alberta in Edmonton. And in 1987, they both got together, they merged the bank and changed the name to Canadian Western, and that was the start of our organization. And the headquarters were actually set up in Edmonton. The other headquarters were in Victoria. They decided to set it up in Edmonton. The IPO was done, the initial public offering was done at $40 million, which was about $10 a share. And when I joined in 1990, those $10 shares were trading at $4, a little bit less than $4. But the bank had made money. It was structured properly. And my job was to make it grow and develop. And the balance sheet was about $400 million at that time. And it's grown to quite a different size today. We also own Canadian Direct Insurance. I'm sure you've seen the ads on television. It's a wholly owned subsidiary of the bank. We own Valiant Trust in Calgary, which provides stock transfer services for publicly traded companies. We own Canadian Western Trust, which was Aetna Trust. We acquired it in 1997, headquartered in Vancouver. And it's a major trustee in Canada that has about, I think about 47,000 pension plans that we are the trustee for across Canada. We have offices right from Toronto West. And we have about, I think, $7 or $8 billion in assets under administration there. In 2008, we acquired Adroit Asset Management in Edmonton, about $800 million in assets under management. In 2010, our last acquisition was National Leasing in Winnipeg. It has about 300 employees, and it's the largest small-ticket leasing company in Canada, operating right across the country, and extremely profitable. One other unique aspect about our business is we have posted 93 consecutive profitable quarters. That's 23 years. We've never lost money in 23 years, even in a quarter. And 2 weeks from today, we'll be publishing 94. We double our assets every 5 years. So not many businesses can set out a strategic plan where you double every 5 years, but we do. And so those $400 million in assets from 1990 are today $14.5 billion. And we have a market capitalization in 1990 of $16 million, and today it is $2.1 billion in market cap. And we also have $7 billion in assets under administration and under management. But we focus our efforts on the 4 western provinces, British Columbia, Alberta, Saskatchewan, Manitoba, for a reason. We're kind of off the radar screen for the big banks in Eastern Canada. And we were also given the Best Culture in Canada award in 2010. So that's enough for a commercial on the bank. A few statistics, which Travis will audit for you a little bit later, but I think I got most of them from CIBC's economists. So if they're not right, Travis, you can holler at those guys. So unemployment in the West, and if you look at the 4 western provinces, our unemployment rates are lower in all the 4 western provinces. The numbers I have here are about 5.7 for all the West unemployment rate. Alberta about 5.1. I think it's actually under 5, and Saskatchewan is under 5 now, around 4 point something or other. So very, very good numbers. BC, I think, was around 7-ish. And what we hear mostly is skilled labor shortages when you come from Alberta, and particularly northern Alberta. And I attended with a delegation to Ottawa last Tuesday, and we made presentations right from the Prime Minister to about 6 or 7 other ministers, just bringing awareness to some of the issues that we have to deal with out here in attracting skilled labor, very similar to what you were talking about in bringing labor in from the United States. We had one major construction company in Alberta go to Denver, ran a trade fair for 2 days and had 1,000 applications of skilled labor. So that's a resource that we really have to find a way to tap. So we met with Jason Kenney in Ottawa as the Minister of Immigration, and he has several ideas of how to change that and get skilled people into our market here and deal with that skilled labor shortage. GDP growth, Alberta was in 2010 about 3.8, 2011 about 3.6, or maybe a little bit less than that. Forecasting around 3.3. And a lot of the GDP growth is being held back by the lack of labor. In BC, 4 in 2010, 2.5 in 2011, and 2.6, still not bad numbers. Saskatchewan, Manitoba, extremely good numbers. I've been traveling over there and meeting with commercial clients, and we're hearing about labor shortages, especially in Saskatchewan now. Actually, Estevan, Saskatchewan's like the new Fort McMurray. You can't get a hotel room, and it's a Bakken oil find that goes into Manitoba and actually into North Dakota and into the U.S. So Canada looks pretty good. House prices, and we'll hear more about house prices later, kind of all over the map in Canada. We've had increases in Ontario and British Columbia, mainly driven by the Lower Mainland. Quebec actually is up. Alberta's flat. Ontario's up. So we've got kind of a mixed market, but I don't think we're going to see the calamity that we experienced coming out of the U.S., mainly, I believe, from tax deductibility on your mortgage, and no restriction on how big a mortgage can be, because people would go and get a mortgage and load all this debt onto their mortgage because it became tax deductible. So all their debt was on the mortgage. And we've heard about Canada. It has now got higher family debt per capita than the United States does, which doesn't surprise me at all, because if you've had your house foreclosed on, your debt just went away. So, you know, if you had your car loan and your consumer debt all loaded onto your mortgage, I'm not surprised at all that the debt's lower in the U.S. But looking forward, I'm very bullish on Canada. We've got a great outlook going forward, and we get mixed numbers, but I think generally speaking and comparatively to most other parts of the world, we're going to see a very strong performance out of Canada. And the U.S., slow for sure, but still growing. And one statistic that I picked up recently was that we were hearing this China slowing down. It's going from 9% per annum growth to 8% GDP growth. That's going to be catastrophic for the world. 1.7% growth in the U.S. is equivalent to 9% growth in China in dollar terms. I found that very striking. So yes, Asia is a big market and we should be pursuing our interests over there. But don't forget about the United States. The United States, if it bounces back, will be a world changer and still is 35% of the global economy. Unemployment's still very high down there, but a lot of skilled labor, and we could put a lot of that labor to work here. And housing, I think they're going through maybe another downturn because they're seeing strategic foreclosures now where, well, my neighbor hasn't paid his payment for a year, and I've been paying mine, and nobody's foreclosed on him. Why would I pay? So he stops paying. And it continues to drive these house prices down. And as they continually come down, it drives the market down. So you walk from your house and you buy another one. And you say, well, how can you get credit? Well, they seem to be able to do it. But if it gets low enough, you can pay cash. But the U.S. is not catastrophic. You hear numbers like if they had a 5% sales tax, they could eliminate their deficit. Or if they had a 5 cent a liter or 25 cents a gallon gasoline tax, they could eliminate their deficit. So they have remedies. They are one economy and they have their own currency and they have tremendous resources. So I think the United States can pull itself out, but they've got political paralysis right now. And our Prime Minister has said that it's in his view, he doesn't think anything's going to happen down there, at least until they get their election over with. But the real problem is a lack of confidence. Because when you hear in your businesses here in the Comox Valley and you turn on your television in the morning and you see, oh, Spain's going to default or Italy's going to default, you get scared and you say, well, I was going to go order a new half-ton today, but maybe I'll wait till next week and just see how things look. So that confidence factor really does play on our minds and plays on the stock market for sure. So there's a lot of liquidity on the sidelines. There's actually trillions of dollars on the sidelines, and we see it. When we issue bonds, we see oversubscription for double the amount we're trying to raise at very low rates. We just did a 3-year fixed-rate bond deal at 2.2%, and we're oversubscribed by $100 million. So, and that's just us. And there's lots of other examples like that. And the stock market is driven by fear and greed, and right now it's fear. It's all fear every day, and it just keeps going down and down and down, and then you have a wee little snippet of good news, and up it goes, and then down it goes again. So it's day to day. But corporate earnings are excellent. We saw John Deere and Caterpillar just recently come out, 40, 50% increases over last year, where they had really good, quite good years. But again, that lack of confidence comes into play, and the stocks continually to grind down. Globally, we had the Arab Spring, revolutionary changes in the Arab world. Interesting statistics like Steve Jobs had more patents personally than the entire Arab world. So, they have to bring their education standards up, and with social media now, they're starting to see how the rest of the world lives, and they want a piece of it. They desire a democracy. And I just heard a speech in Toronto recently that George Bush gave, and he talked extensively about that, about how that world is changing there, hopefully for the better eventually. But they want more freedom. The Eurozone, quite another story. A major pension fund manager the other day described it to me as I said, what's going on in Europe? And he says, it's like slow motion train wreck. It's a train wreck and it's happening really slow, but it's still a train wreck. You've got the pigs you heard about, Portugal, Ireland, Italy, Greece, and Spain. You've got a lack of political will to really, really deal with this quickly. You got regulatory bungling on the bonds. You know, the governments kept issuing bonds, and of course the rules for the banks over there were if you held sovereign debt, you didn't need any capital for it, and no reserves, and if you could make a spread on them, then you know, it was free profits. So the banks were incented to actually buy all these government bonds, and they bought lots of government bonds, and really all the governments were doing is transferring the problem to their banking system. And now the banking system is in trouble. So there's, you know, in that case, it was a real problem. So this sovereign debt on the bank's balance sheets is all held at par. And many of these bonds are trading at serious discounts. So, I mean, there's a haircut to be taken there. And I look back in history and I say, well, wasn't Margaret Thatcher smart in saying, no, the Eurozone won't work. It's got 17 different economies. It'd be like herding cats. You just can't do it. And you got too many special interests. So the UK at least is in control of their own destiny. Now Greece, we'll talk a little bit about Greece. And I'm going to take a lot of this information from Vanity Fair, and Michael Lewis, who's a great writer, wrote this article for Vanity Fair on beware of Greeks bearing bonds, which was a really, really good advice to people. First, he says they can get out of their problems if they want to sell their islands. Well, they don't want to sell their islands, of course. But to keep it in perspective, Greece has about 11 million people. That's about 2 million less people than there are in the city of Los Angeles. There are about the same number of people in Ontario, but Ontario's economy is much larger than Greece's. So how can something going wrong in Greece trim trillions of dollars off the markets? Well, I'm going to tell you why. They have about 400 billion in debt, plus it's rising every day. They have $800 billion. I'm not sure whether these were dollars or euros, it doesn't matter. Billion in pension liabilities, unfunded pension liabilities that they were hoping the rest of Europe were going to pay. They have total debt of 1.2 trillion. That's $250,000 per working citizen in existing debt, and it rises every day. When they entered the euro, they weren't really keeping track of their debt. And in 10 years, their wages doubled. Government wages doubled. Plus the bribes. Bribes were on top of that. That was just kind of like getting a bonus. And then in the government jobs, they're paid 3 times the private sector, salary jobs. So if you get on with the government, of course, you get 3 times what the private sector got. And a good example of how it worked was the National Railroad, and this is one example that Michael Lewis used. They had revenue of 100 million euros per annum. Their wage bill was 400 million euros per annum. So you don't have to be a mathematician to figure out that's not going to work. Plus 300 million in operating costs. So they had 100 million in revenue and $700 million in costs. And the average employee made 65,000 euro a year. That's about $100,000 a year. And Michael came up with a conclusion that it would have been cheaper to send every citizen in Greece to wherever they wanted in a cab than keep this railway running. In the school system, they have 4 times the number of teachers that the rest of Europe has, but they have the lowest ranking in education and retirement. And these are for arduous jobs, they call them. And these are really difficult jobs. And I've listed 4 of them here: hairdressers, radio announcers, waiters, and musicians. These are the most difficult jobs. And if you have one of these kinds of jobs, and you're a woman, you retire at 50 years old, and if you're a man, 55, and you have a pension for life. And many of the pensions in Greece, when you die, they transfer it to your family, so your family still gets the money. There is no punishment for not paying taxes. Bribery is rampant amongst government officials. Doctors all earn sort of $12,000 a year or less because that's when the taxes start. And there were more Porsches sold in Greece than there were people declaring income over $100,000, and the Porsches cost $100,000 there. So you can figure out how did that work. And most have to be bribed to do almost anything. In fact, the latest article I saw, some government officials were actually running seminars on how to not pay taxes if you were actually paying them. The annual budget reported when they joined the euro was 7 billion euro. And when the audit was done after they allowed them to join was 30 billion euro. So you kind of get the picture. The United States, U.S. corporations are extremely profitable. And they're a huge part of the government, or the global economy at 35%, but they have resources to solve their problems. But they have that political wrangling that's paralyzed the government. But the U.S. can print its way out. They can inflate their way out. And they're likely to have to do that at some point in time. Where you've only got one economy, and I don't think Europe can actually do that because they have 17 different economies. They have plenty of liquidity on the sidelines. There's some of these companies like Microsoft have billions of dollars in cash on their balance sheets. But fear and uncertainty still prevails there. So I'm predicting there that about a year from now, we'll start to see some progress in the United States. So some of my predictions going forward, I think Canadian GDP in the next year will probably be flat, but still okay. I think that's okay. Rates, I don't see any reason for rates to go up, although Mark Carney did say this morning that it was likely that rates would start to rise in Canada by 2013, or between now and 2013, whatever that means. But all we're seeing lately is a decline in bond yields in Canada. We've got a 30-year bond at 2.6, and if inflation actually rises above 2.6, you got a negative return on that bond. But I really can't see people locking away their capital for 30 years at 2.6%. 5-year Canada bonds trading around 1.3. And sometimes, we lower our rates to try to stimulate the economy, but the cure is worse than the problem. What you do is everybody who's living on interest income out there really has a hard time living on really extremely low rates. Canadian dollar, I expect it could go down into the low 90s. It was around 95, I think, today, to maybe $105, $1.05, and I think there's a good reason and more likelihood it's going to go up. Oil, I think it'll probably bounce between sort of $90 and 100, 105. Right now we've got Brent, or world oil prices, trading about 107 today, and West Texas Intermediate trading around 97. So there's about a $10 difference. If you turn the clock back about 6 months, there was about $25, $26 difference. And all that boils down to these pipelines. If they can take the oil out of Canada and sell it in the US or offshore, either on the XL pipeline or the Gateway pipelines get built, then it will pull the Canadian price of oil up, which would be good for all of Canada. Gas is around $3.50, $4 in Canada. It's trading around $11 in Europe, and that's why this pipeline through to Kitimat and LNG terminal and ship it off to Europe and get $11 rather than get your $3.50 or $4 here. Gold, I don't understand. I don't know why it would go high, but I suppose that if you're afraid of paper currency, $1,400 to $1,800 in that range. It did spike up well over that. Mortgage rates, I don't think, are going to change much. We're not seeing any upward pressure on rates. In fact, deposit rates in banks are staying extremely low. There seems to be lots of liquidity, and as long as that's the case, borrowing rates should stay quite low. Toronto Stock Exchange, I think, could go as low as 10,000. It's around 11.4 or so right now, or as high as 13 and a half. So I think you could see some progress there. So those are some sort of predictions that I had. The other thing I'd like to point out is if you're an investor, you look at dividend yields, and dividend yields are at very compelling high prices right now because stock prices have gone down so much. But you've got dividend yields on the Royal Bank of Canada at around 5%, and you get a dividend tax credit on it. You know, I shouldn't be saying this as a banker, but why would you put your money in the bank when you can buy a share and get a 5% yield with half the tax rate on it than you'd get on a term deposit? Great-West Life, 6.1% dividend yield. BCE, another good company, 5.4%. Huge rates when you compare those to 5-year GIC rates at 2.6 or 7. It's pretty compelling. So what that tells me is that the stock market's gone down in this low rate environment far too far. But certainly the key, and we did speak to the Prime Minister about this, as Gateway Pipeline and the XL Pipeline. He said they're very strategic to Canada's development, and they have to be done. So I think you're going to see some very innovative things done. Enbridge is already talking about going around Cushing, Oklahoma, and getting the oil out. And this is one of our biggest exports. So now I'm going to have a little bit of fun. I got some quotes for you, mostly from Jefferson, Thomas Jefferson. And this one comes from John Kennedy. He held a dinner at the White House for a group of the brightest minds in the nation at the time. And he made this statement: "This is perhaps the assembly of the most intelligent ever to gather at one time in the White House, with the exception of when Thomas Jefferson dined alone." And now I got some of Thomas Jefferson's quotes here. And this one, you know, I thought of this one when I see all these Occupy groups. The democracy will cease to exist when you take away from those who are willing to work and give to those who would not. Pretty prophetic. It is incumbent on every generation to put its own debts as it goes, or pay its own debts as it goes, a principle which, if acted on, would have saved 1/2 of the wars of the world. I predict future happiness for Americans if they can prevent the government from wasting the labors of the people under the pretense of taking care of them. My reading of history convinces me that most bad government results from too much government. And here's one that really will get to you. I think it got to me. Deficit financing transfers debt to our children and robs them of the quality of life we have enjoyed. So now I'll talk, I'm okay for time, Clarice?
Yes.
5 minutes? Good. She warned me, so, and I'm very afraid, actually. My ingredients for success, and I'll go through these pretty quick. And these are things that I certainly live by, and I've taught my children to live by, and certainly people that I work with. Instinct. Believe and rely on your instincts. They're usually right, and they say always listen to your gut. Your gut's usually right. It's usually more right than your head is. Experience. Gain all you can. There's no substitute for experience. Always be competitive. Number 4, teamwork. And in loyalty, get pushed up the ladder of success, not pulled. Be flexible. In the best negotiations, both sides should be winners. Be a good listener. My dad always taught me, you never learn anything with your mouth open. Don't be a perfectionist. Get it right, not necessarily perfect, because I always say a perfectionist job is never done. You can always do it better. So you keep at it and at it and at it. Meanwhile, your competitors got the contract. Be respectful. Always be ethical. And communicate. You must be able to communicate to lead. Always be humble. Be positive. Be creative. And look beyond the obvious. Be a decision maker. Indecisive managers are not leaders. Lead by example. Do today what you can leave till tomorrow. That's one I pound into my son's head every day. Well, I can do that tomorrow. No, do today what you can leave till tomorrow. Never give up. Always set achievable goals and measure progress regularly. Never bet the ranch. Never stop learning. And don't look back and say, if only. The future is all we have left. Make the best of it. Contribute to your community. Strong companies make strong communities and strong families. And you hear so much out there about those awful corporations and everything, but they employ a lot of people and they make communities successful. Balance your lifestyle to your income, not the reverse. I've talked to a lot of grads in my time, and the first question they ask, if I worked for you, what would you pay me as a signing bonus? I said, hold it just a minute. I'm going to give you an opportunity to learn something, and you're not worth anything to me yet. So stay fit. A lazy body is a lazy mind. Share the successes and share your recognition with others. Use the word we, not I. Have fun. And give thanks and leave the world a better place than when you entered it. Thank you very much for inviting me.